I wait for the first test, and once it comes back here on the first touch, I use the whole moving average as a support and I go long from there. We do get the first touch that actually does provide for a nice shorting opportunity, and then taking profit at the first support. And this is a perfect area to get into the long and ride with the uptrend. Use that as a short, take a quick profit right here. I personally use this for stocks, futures, crypto, anything. All right, welcome to my educational video on moving averages. Today I will be discussing the Hull moving average, which is, in my opinion, the best moving average out there. So the difference between Hull and the SMAs, the simple moving average, and the EMA, the exponential moving averages, as well as the volume weighted, is that Hull is much smoother, it's much more responsive, and it basically reduces the lag. So I personally prefer it over any other moving averages. Important point to note, I don't usually use moving averages in my day-to-day trading, but I do understand they can provide important context, and I would still pay attention to the Hull moving average from time to time. It's more of a confluence signal, so it's more of a secondary indicator for me rather than primary, but nonetheless I think it's an important indicator to cover, and that's what I'm going to do today. So to start with the setup, here's the free publicly available indicator, Hull Suite, by someone called In Silico. And then the way I set it up is I always put the source for close, and then I tried many variations, and I found out of these the EHMA is the most responsive one with the lowest amount of lag compared to the others. For the length, it's recommended to use 180 to 200 for the floating support and resistance, which is exactly what I'm using. I'm using the 200, and then 55 for swing entry. I personally don't like this one. I think it's a little bit too of a fast pace for myself, but if you do want to try out 100 or 20 or 50, 55, 200, go for it. Make sure to back test it, forward test it, and it's all up to you which length you want to use. Length multiplier I always leave as 1. If you press on this, you can show the Hull moving average from a certain time frame that you choose. So let's say you want to scalp on a minute time frame, but you do want to see the Hull, let's say from an hourly or from the 50 minutes. Click this, then I go down to 15 minute, and it's going to show me the Hull moving average from the hourly time frame. And then additional settings include, you can color it according to the trend. So if I click on that, whenever we are in a downtrend, it will paint it red, and whenever we are in an uptrend, in my case it would paint it green. You can also choose to color the candles based on the Hull's trend if you want to, and you can also choose to show it as a band, which I personally keep on. And then you have other settings as well. Let's say you want to make the line thicker, you can change that here, and then decide on how much transparency you want in the band. In the style right here, you can choose the colors for the moving averages as well for the band filler. And if you want to color candles according to the trend, you can use this. I personally use this moving average on the hourly and on the daily. You are welcome to use it on any other time frame and test it out for yourself. So how do I use the Hull moving average as a dynamic support and resistance? Essentially, once the price crosses above the moving average, I wait for the first test, and once it comes back here on the first touch, I use the Hull moving average as a support and I go long from there, and then I take profit at the nearest resistance, and that's the trade. I would recommend making sure that there is also confluence from other factors such as support from the candlestick chart, or maybe you can put on the volume profile and see if there is a high volume node supporting this right here. You can also use VWAP, and then while the price is above the Hull moving average, I do not usually use the second touch as a signal for the trade, because in my experience, one touch usually provides a good bounce area. The second touch, more often than not, it results in a failure crossing below the moving average. Once we're below the moving average, what I do is I wait for any kind of bounces up to the moving average to fade. In this case, this would not be a good signal for the first touch to fade and go into the short, just because at this point we're already above this resistance right here, which was tested many times here, so it wouldn't hold. So this would not be a wise trade, and this is what I'm talking about when I'm saying I use Hull moving average as a secondary indicator. It's not that reliable, and you must make sure you always understand the context, the bigger picture, before just blindly longing or shorting based off the moving average alone. And then here, after it loses support from Hull moving average once again and crosses below, we do get the first touch that actually does provide for a nice shorting opportunity, and then taking profit profit at the first support. The second touch I wouldn't trade, and it results in a breakout. And then the reason why I wouldn't touch this trade and try to go for a long right here is because for me personally, this would be the first touch once we're above the moving average. So this would be the opportunity to get long, provided that we're still in a demand area. Make sure to check for that. And again, right here, once we are below the moving average and we're in a downtrend, the first touch provides a nice opportunity for a short. And this is another example of limitations of using solely the moving average. Once the market is in a sideways chop, your account gets chopped to pieces by this ranging. That being said, it's still a very nice tool for looking for an opportunity to get long once the uptrend is established and you're waiting for a pullback. And this is a perfect area to get into the long and ride with the uptrend, and then always make sure to take profit sometime along the way before uptrend turns into the downtrend. Technically, the way you could trade it is once the price crosses the moving average from above and gets below, you could get short here. I personally don't do that because it's quite risky if we end up chopping sideways and then, as I said, your account gets chopped up to pieces. Instead, I would wait for a test from below right here, use that as a short, take a quick profit right here, and then get out of the way once it goes above. I personally use this for stocks, futures, crypto, anything. And then here, once again, once we're above and establishing an uptrend, any pullback to the whole moving average is a nice opportunity to get long and then take profit somewhere at the resistance right here. I would advise against thinking that every single first test from either above or below always results in a bounce or rejection. As you can see right here, even though we're below the whole moving average, and this is technically the first touch from the moment we lost it and started the downtrend, we still go way above and you could easily get stopped out even though the price went much lower after that. So be wise, make sure to check for your risk reward ratio, make sure to place adequate stops, and always use bigger picture, bigger context. For example, in here, I think instead of just looking at the whole moving average, you could have seen that this is the resistance that we're dealing with from right here, and sure enough, this is where the price is attracted. This example is not as smooth as the others, but again, we're in an uptrend, a pullback to the whole moving average, an opportunity to get long, take profit at the first resistance, and then second touch usually leads to us losing the moving average and getting into the downtrend. Up to you if you want to get short at this point. Again, it's a risky way of trading, but that's completely up to you. An example of a higher trade, say in crypto Ethereum, once we cross above, we establish the uptrend, and any pullbacks to whole moving average with the adequate stop, with the adequate confluence from support areas can be used for a good bounce to go long, and then you take profit at whatever point you're looking to take profit at. Technically, you could even take profit once we are crossing below, provided you entered right here. That would still make for a nice long-term trade. And then once we lost the support and whole moving average turned into resistance, first touch provided a nice opportunity for a short. Second touch, as usual, is not that reliable and is more risky. Again, here, once we lose whole moving average and it turns into resistance, I use that as an opportunity for a short, the first touch. And once it comes here, I don't necessarily hope for a breakout, but I'm not as willing to get into the short as on the first touch. This is a riskier setup for me. And then obviously, eventually, just like with any other support resistance, the more it gets tested, the more likely it is to finally break. And sure enough, eventually we do get a breakout. The reason why I don't trade breakouts with whole moving averages is that you get so many ups and downs that just simply going long right here and then being stopped out multiple times is just not something I'm looking to do. I would much rather wait for the price to break out and then look for any pullbacks to get long. And then once I'm long here, I'm looking to take profit at the first resistance, which in this case would be this structure right here. That means I'm taking my profit right here. Again, I don't use whole moving average as my primary indicator. I don't think it's that reliable just because it's more useful in trending environments and less useful when we're ranging. So instead, what I focus on for my indicators, I use volume profile and VWAP bands. And if you're interested in learning more about these indicators, I recently made videos on both volume profile and VWAP, which can be used for both trending and ranging environments alike. Make sure to check them out, and thank you for watching this video. If you like this video, please make sure to subscribe. I will be releasing more videos in the future.